Hello guys, and welcome back to another YouTube video. Today I'm going to be explaining the losing trade I took yesterday on the euro. I think the losing trade was unlucky. If things went my way just a bit differently, then I would have obviously banked profit and would have been break even. But let me explain it. Let me show you my thought process behind it. Because in trading, losing trades are going to come. So it's no point shying away from it. You have to embrace it and be as transparent as possible. So let's get into the video. So I'm on the 50-minute chart here on the euro, and essentially I was just looking for price to basically come and take this buy side liquidity. I've been waiting for it for time. I was expecting it to basically sweep this. So I was looking at this move basically leading up to it, and price was quite balanced, I would say. It was filling inefficiency, actually here, filling this. We had OBs formed, we were breaking structure. Everything was quite balanced, even further down balance, a bit of inefficiency here. But I was just looking at what was kind of this move here. And then inspecting Asia session, just to basically sweep, push up and take that buy side liquidity. So I was looking at this here, this OB here on 15. So OB plus 15 mins, as you can see there. I was kind of looking at this to be the area where buyers going to step back into market. We have the Asia session here. I'm looking at the Asia high, and we obviously had the Asia low here. I'll mark that in there. So that's your Asia low, liquidity, bottom right. And then obviously this is my Asia high. And essentially I was just looking for price to sweep Asia lows, tap into the 50-minute OB, and then rally up to Asia high liquidity and obviously take buy side. That was my thought process. So this is on the 50-minute time frame. Let me jump down on the 3-minute. So obviously everyone knows kind of what I look out for now when entering this basic trade. I want to look for some form of accumulation, manipulation, and distribution, i.e. price to accumulate, manipulate some low, come trade back in, and then we look for space to trade higher. Okay, that's essentially what I like to look out for. So we started getting early signs of this when we started to accumulate at the Asia low here. So if I just to highlight that in, like so, we can see we had this accumulation phase. Okay, price was accumulating in here, and obviously this is Asia long, and extend that all across. So this is your Asia low, and we filled this 50-minute OB. So I'll show you the entry in a second, but essentially what I saw here was we accumulate at the Asia low. We then manipulated, tap back into that OB, and then push back and traded back into the Asia range, okay? My entry was around here, and obviously I got stopped out here. So yes, explain sort of the thought process behind it. And the entry was on 1 minute. 1 minute time frame. Okay, cool. So, yeah, so essentially what I was waiting for is I saw price accumulate, had this Asia session low here, and I saw base level price push down, take out this, tap into that 50-minute OB, had a bit of consolidation again, and then price basically spiked up and traded back into this level. So I was basically taking this as price wanting to push higher, wanting to take highs, and basically getting in before the move happened, and that's what's so important. So essentially what I did was from swing low to swing high here, I basically marked that up as my swing. I then entered, I'm trying to remember where I entered now. It would have been at this OB, taking this OB in consideration. In here, we just add it in. That last down kind of full push up, OB plus, because that's the only fallible place. And then let me quickly check my MetaTrader when I got in exactly, show you exactly my price point when getting in. So my entry was, it was here, and it was 11168. Yeah, it's a bit higher. And then I think I had, if I was 134, Yeah, correct. Yeah, cool. That was my SL. Okay. And I was looking to target obviously way further, way and above. But that's essentially, yeah, I was looking to take out that Asia high there. On the 1 minute, it looks a bit cleaner. Take out that Asia high there, bang. Okay, cool. Yeah, so that's essentially what I was looking for. Very unfortunate, I think. Well, I mean, people have mixed opinions when I took this trade. There was like, oh, you didn't do this, you didn't do that. But for me, it felt like the right trade. It felt like everything was ticked. I felt like I saw the accumulation. I saw price manipulate. Frankfurt open, where it's 7 a.m. So I'm in my kill zone time frame. And you've obviously got 9. Let's just put to 10 here. So anytime within this gap, I'm happy to take a trade. And essentially, I just saw price tap into that open of that 50-minute OB, push up high, trade back into the Asia range. And I was looking for price to come back, retest here, and push away. And the trade actually started off going all right. It went in, obviously, my favour. And then, obviously, we had that last dip. And within literally like a pip, I was stopped out of this trade. And minus 1% was hit. And it is what it is. Like, that was my exit plan. As soon as I entered the trade, my plan was if price was to go further lower, I want to exit this trade, and that's exactly what I did. So, psychology-wise, I know obviously you see that and you see your trade go up and da-da-da-da. Psychology-wise, it's so good to have an exit plan. I speak about exit plans all the time because when you know when you're going to get out, when you know if price does X, you're going to do Y. Once you already psychologically have that in your head, it allows you to not think. I don't have to think. I already done the planning before this trade. And that's why stop losses are so important. People think it's risk management. Yeah, it is 100% risk management. For me, it's more of it's more psychology because I'm thinking, well, if price does X, I'm getting out of Y. For me, that's more my brain not having to emotionally think about things. It's already, the process already done. And that's based off sort of data and thousands of trades of backtesting of where I want to position myself with my SL. So yeah, that's why obviously that was in place. And then it's a bit unfortunate because yesterday, for example, price didn't actually take out take out these lows. So price didn't take out these lows, and we yesterday we stopped here, and then price pushed up. My exit plan, if the 1% didn't get hit, would have been when price gets to 1 standard deviation. What do? I take 25% off my position. So I would have took 25% off here. Bang, that's that taken out. So now my SL moves to break even. Okay, so now I'm protected no matter what. I don't care where the trade's gone. I already bank profit. I'm already better than 1% of the people out there. I'm already better. I'm better than the 2% of traders out there. Why? Because I've banked profit. I made money from the market. Okay, but this is hindsight. If price didn't stop me out, I'm now one of the 97% people in this instance. But you know the drift. And that's why I do it. I play this out again. You would look at that and think this trade's hitting 40p. We're taking that Asia high. We're sweeping that liquidity. I know we are. That's what's going through your head right now. This is why you have an exit plan. Because most traders will see that right now, and they would enter here, and they're going, my target's all the way here. I'm being greedy. I'm aiming for the stars. I'm the best trader in the world. You have all this euphoria. You think you're just unstoppable. My trade's going to smash straight through. I'm going to make so much money. I know these are the thoughts going through your head when you see a move like this. For me, exit plan. 2 standard deviation. Oops, sorry guys. Two standard deviation. What am I doing? Another 25% off. Bang. Since there's no really structural lows, I would normally like to see a low like that form. Then I'll move my SL up to here as part of my exit plan. But my exit plan is still at break even. So my trade status is, I've now taken 50% off and I'm leaving the runner just to run to hit my Asia high. So many people think, you're crazy. Why are you doing that? The trade's obviously going to come smash up here. This is what your analysis said. You're so right. Da, 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 da. All this running through your head. Look what happens. There There we go, bang. Okay? And this is why having exit plans are so important as a trader. Because you would have probably entered this trade here. You would enter this trade, let's say for example you got in here, bang, you put your stop loss below here, and you're just letting that trade run. You're thinking you're the best trader in the world. It's going to keep on running. Oh, do you know what? I'm going to hit new highs. I'm going to try to target 97 high that hasn't been touched in 15 years. And you think you're going to run this trade up to the rest of the world. You have to realize when we're on these lower time frames, guys, like anything can happen. You're literally, it's just, when you're anything below the now chart, it's risky trading. It's extremely risky. You don't want to be in trades for too long. This is day trading, so scalping to the finers. I'm entering off the 1 minute chart. Do you know what I mean? My targets can't be to the moon. Like, be realistic. Like, be realistic with yourself. Like, like people just want to, I don't know, like they try to target, they think they can reach the world. All this, I already explained it. But just don't be greedy with it. Just understand that like anything can happen on these time frames. Even on the large time frames, anything can happen. So have that exit plan. Have, if price does X, we do Y. Price does X, we do Y. It's the same thing when placing a trade. I have my entry plan, my exit plan. If trade does X, I'm doing Y. If a trade comes into some sort of higher time frame confluence, if the market accumulates, if market manipulates that price, trades back into the Asia range, will give us a market structure shift, I'll look for the retest and try to continue to try. I do it time and time again. That's my entry plan. If price does X, I do Y. My exit plan is exactly the same. If price does X, I'm doing Y. If price come up to my deviation levels, I'm taking something out there. It's something called partials. I'm taking partials. If price comes to 2 standard deviation, I take another partial. I'm moving my SL into break even, so it's a risk-free trade. By having that exit plan, I'm literally, even if it's a losing trade, I'm still better than the 3% of people. I'm still better than 97% of people out there that lose money in the Forex. I even think the statistics worse now. I think it's 98% of people lose money in the Forex market now. So I'm just better than that just by having a plan that I can't decide apart from the market. That's the beauty of it, okay? So guys, look, I don't want to ramble on too much, but this was the losing trade that I took yesterday on the Euro. I want to be as transparent as possible and show you everything and my thought process even through a losing trade. I'm very happy with this trade. I've journaled it, and hopefully it's something that you guys can learn from as well. But until then, see you in the next video. But please like, comment, and subscribe, and I'll see you in the next one.